All right, welcome to the weekly meeting, 323. Almost, we got about another week left, a week and change in this quarter, second quarter, fiscal year 2020. About it's it's getting biased, man. We only have another 2 quarters left to achieve whatever it is that we're trying to achieve. Today, I want to show this short video about trading a bull market, and it's just so people kind of understand um, what we've been talking about here lately, since we are in a bull market. It's a 4-minute video, and this is really not one size fits all, but the gist of what this guy is saying is exactly uh, how we should probably be aiming our arrows here, right? Uh, when we start trading these markets, if we can stretch out the span of time that we're trying to take advantage of, uh, you'll find a different level of success. And while everybody won't be the greatest trader, if you stretch out the span of time, you'll probably find that you're a much better investor. So let me pause this video. All right, so that was just a short video on trading a bull market. We're currently in the bull market. I think that most of us believe that we are pretty extended here. Everybody has a little bit different strategy, which is fine, right? Whatever strategy that you're using, you just have to make sure that it makes sense for you. I like to use a 9 and 13 moving average, and you can buy when price touches the moving average. In this case, if your market is moving and it's not touching your moving average, and you're a moving average person, you have to adjust your length on your moving average so that the market will touch it. And during this part of the trend, you can see it wasn't touching, and now the trend is slowed down a little bit. So now we're getting touches on the moving average, which is cool. This works for whatever you're trading, right? And you have to adjust the moving averages based on the trend. Now, your moving averages won't work if the market is not trending, right? If the market is consolidating, then a moving average isn't going to help you very much. So if we want to see, let's go to this daily. If you're trying to trade with a moving average through here, you're going to get wrecked because the market is just consolidating. It's going back and forth. Moving averages don't work in a consolidating market. The same way, if you try to use an RSI during a trending market, the RSI is not going to work, because the RSI is going to tell you the market is overbought. And of course it's overbought because it's buying, So you can't rely on that RSI hitting 80 and then sell it. But in a market that's consolidating, a RSI is a better tool than the moving average. So if you kind of understand your tools and what they're used for, then you can use those tools to assist you in trading. You can use that as another level of confluence, or however you decide to match that tool up with the way you trade. There are a number of different ways that we can, I guess, break this down. But at the end of the day, you're going to have to match these tools up to your strategy. A tool that you may want to use instead of a moving average is a trend line, right? Trend lines do the same thing, or it's similar to the moving average, right? The thing about the trend line though is it doesn't calculate and fluctuate with price. A trend line is just going to be a solid, rigid line, but you use those in the same way that you would use your moving average. So we might as well just pull up the 3-month chart.
Well, wait. Let's go back. Okay, so the moving average. Okay, so I've never moved my moving average. I'm going to go ahead and ask the question because I want to be a better student, right? So I need to be an example of that. How do I do that? Now, I write my question down. I have a whole computer sitting in front of me, a phone, right? So I can write these questions down, let him finish speaking to see if he's done, and then don't let him go to the next step. Come back to it, right? So he can get his words out, because we don't want to let him not get to the end of what he was saying, because if we take him to the left, he may not finish that, right? So we got to figure out how to be more active. Okay, so I'm just going to try to be an example of that. But the moving average, you say you move it to make it match the candles. How much of movement do you get between a 9 and a 13?
Well, okay, it's a great question. So a 9, let's talk about the 9 and the 13 anyway. So the 9 period moving average is just 9 period. In this case, it's the average close in 9 days, right? That's the green line. You want a shorter one, and then you want a longer one, because the shorter moving average is going to be on top as the price goes up. The longer moving average is going to be on top as price goes down. And I color code mine red and red and green for buy and sell. And the way this is supposed to work is, as price is selling, you get the crossover here. This crossover, price actually started selling up here, and that's what this crossover represents, right? We have other ways to tell when price is selling based on order blocks and all that good stuff, or whatever you're using. If you're using support and resistance, supply and demand, or whatever, this is just another piece of confluence. Now, speaking of the length, right? So the way you want your moving average to line up, I want my moving average to come across the bottom of these candles. So if the moving average is way up here and price is coming through it and the trend is still going up, or the moving averages are way down here and price is coming through it and the trend is still going down, I want to be able to adjust the time period to either bring the moving average closer to the candles or move the moving average further away from the candles. And
Yeah, that's the example I'm asking. How
yeah,
do
I'm
you
gonna show
do
you.
that?
I'm gonna
Okay,
show
okay.
you. I want to kind of see. All right. Um, I need to find a case where they're off. Uh, okay. So let's look at, see how these moving averages are kind of raggedy through here, and especially through here, how it comes through the middle of your formation. So all we're gonna do is go to the settings, and I'm gonna adjust these longer. I might use 15 and 18.
Oh, okay.
Or I'll use 15 and 19. So it's still, it pushed it higher, but it's still not high enough, right? So maybe I want to use a 20 and a 25. See how it's pushing it higher up?
Some awesome stuff, folks. You better
So
dial it in.
at
Put
some
it on
point, what's that?
put it on 200,
Put it on the 200 moving average?
50 and a 200.
Well,
Yeah, the 50 and the
I,
200.
I will, but the 50 and the two, you use those in a different way, but
Yeah.
I'll do that.
No,
But
but I just would like to see it.
okay, I will. But y'all see how this, the higher periods that I use, it moves this away from the candles. Is everybody tracking that? A 9 and 13 moving average is for a more explosive trend. If your trend is not as explosive, if there's more movement, like more ebb and flow, if it goes down and comes all the way back up a lot like this one is, you need to use a wider period of moving average. Does everybody understand that?
Come on, let's get active. Let's get active. If you don't
Yes,
understand,
sir.
we got to bring it to the table because this is it. You're looking for retracements. That's what your fib is for. That's what the EMAs are for. They're for your retracements. We are trading the retracement. We wanted to touch the EMA.
Exactly. And in this case, I know you're saying EMA. This is just a SMA, simple moving average.
Yeah, smoother. Yeah.
Yeah. And the EMA is exponential, which they're going to put a formula to these average closing price. The simple moving average is just, I'm simply adding the days and their closing prices and divide it by the number of days, right? So take all the closing prices, divide it by 20, and that's where that line is going to fall. So that's the moving average strategy that I like using, and I like trading trending markets. I don't like trading consolidating markets. That's just me. Now, we're going to move on to the 20 and the 200. And this is we talked about this in the past, I believe. Does anybody remember talking about the 20 and the 200? No.
Yeah, that was
Okay.
like the Oliver.
That's perfect. Yeah, Oliver Velez. You can find most of these moving average strategies. He'll talk about them and the benefits of each one of them. But in the 20 and the 200 is going to be the one that's the steady, and it is not moving as much. The 20 period moving average is going to fluctuate with price. And the thing about moving average strategies again is you're going to have the best experience in a trending market. And it's fitting that when I look at these USD pairs, you're not getting a lot of trends. I guess this is a weekly trend. So this would have been a trade that you could have taken advantage of for 1,200 pips. So it would have went 1,200 pips up, it crossed over, and now you can ride it back down to your 200, right? So if you catch a market, let's look at the JPYs. If you catch a market that's heavily trending, right, that comes and it crosses over, this crosses over your moving average, and it never comes back, eventually this market is going to come back to your 200, right? And you expect the reaction. But in a case where the market just keeps going up like this, I'm switching to my moving averages that are tight, like my 9 and 13.
Ooh, that's a mess. That's a whole mess.
But if you think about this, in the way Oliver Velez uses this, he uses this as a narrow and a wide state, right? The best time to enter this market is when the 20 period moving average crosses the 200, and this is the narrow state. So this cross represents that bullish order block that closed above the 200 period moving average. Then you get a retest. Then the price goes, what do they call it? Parabolic.
Parabolic.
Yeah. So he would probably say you don't enter a buy up here, right? Now, of course, we have ways to enter buys and sells still, but he trades on a much smaller time period, right? But the conventional wisdom says the further the price gets away from the 200 period moving average, the more likely it is to start pulling back and eventually pull back and touch your moving average. Y'all have any questions over the 20 and the 200?
No, sorry, that's good stuff, man.
I can't hear you.
I said, no, sir, that's good stuff.
All righty, all righty.
And these are the basics. I mean, even if you don't use them, you need to know, at least know what they're for. I mean, once you really know what they do, there's no way you don't want to use them. They're great ways to catch bounces in transition, because once the candles get under the 200, it's now a sell. When it gets that 20 and the 200 and that closed range right there, that cross, oh, fire. You gotta have it.
I agree. It's definitely something that we can build off of.
Yeah.
All right. So these JPYs are not going to sell, man. They're when I look at the 3-month candle, all I see is bullish, bullish, bullish. So we just closed a 3-week candle. We closed the 2-week candle too. So on the 3-week, I see a bearish order block. On the 2-week, bearish order block with a tap in. I am expecting these things to pull back some, but I can't see it selling when we have the dollar is getting stronger. I guess I think most of these on the 3-month, we're going to get a pullback. We're going to get a pullback sell, but I don't think it's going to go long range sell at this point. I think that we're just going to keep pushing higher. This is 3-week. Let me look at the 3-month. So we can readdress this, because we shouldn't really, I guess, try to analyze this candle while it's moving. But I think if you scroll through your JPY pairs, I think like to a T, they're all going to be showing bullish.
And you see how it's a flagpole. Anytime it goes up, it's like it's creating the top of the flagpole, and then it stays at the top of the flag. You can't get bearish momentum until the bearish candle engulfs the green candle. Just like anytime you see a legitimate drop, the red candle engulfs the green candle. So that's all you're waiting for. You will see it. We'll all see it.
So with the chef, I do expect we'll get some sort of a pullback on the chef because they lowered their interest rates. But I don't know how far out of whack that will get. So if you're trading the chef or if you're bearish on the chef, like I'm bearish on the chef, I'm just going to trade my chef. This is the chef that I'm looking at trading right here, because we got 6 days left on this candle, and we have a bullish situation. I don't know if we're going to get a bullish order block. I know we got one for this 2-week candle, but sometimes y'all know that we'll get a week of down candle, and then the next week it'll be a bullish candle. But I know that USD Chef should go long, because Chef was the only clowns that lowered their interest rate. So I am expecting us to go get long. And maybe it'll be a little pullback. I don't know. I did put my fib on it. I do have my little areas marked out. I think we talked about this one day last week on Thursday, maybe, but it never pushed down into the area. But if you look at that 2-week situation, we do have a bullish order block on that 2-week. Price did start pushing down. Maybe it just pushes down to this 20-period moving average, or maybe it just taps in just a little bit, leaves an imbalance, and takes off. But I think that for me will be a decent long opportunity.
Isn't that also the power of three?
Well, it is, but
But
I guess what I'm curious to see is, are we going to get a bullish order block on a 3-month? Does that make sense?
yeah, because Chef, I had the same thought. Like with the JPYs, Chef is the one that was looking iffy.
Right. But so if I'm buying JPYs, like I think we'll end up doing,
Mm-hmm.
that would probably be the one that I don't.
Exactly.
Because
Exactly.
they lowered the interest rates. Maybe it'll go up with the tide. But what I would like to see is for us to close with a bullish order block on this 3-month chart, and we got 6 days. That means next week,
Yeah.
and then I think Monday. So I would like for this to buy next week. I would think that it would buy, right?
Yeah, once it closes above, then we'll be okay. Then it'll be matching.
right. But I'm just saying, as far as using time and price, we only have a week for us to close bullish,
Mm-hmm.
which is what makes me think that this 2-week order block will get pushed down and a buy up, and we don't have to worry about it staying down a whole week, I think.
Mm-hmm. Yeah.
Can we reiterate what just happened this week? Because a lot of people, it takes a long time to understand what's going on with interest rates. So I wanted to bring up, because I didn't know about the Swiss. So they cut the interest rates, which means it goes up, right? And this is going to be confusing to people until your light bulb clicks. Now, if Chef is up, what's going to make it go down? Let's say they do the interest rates right now, then they raise them. That's what's going to make it come down. They cut them, so it's going up. We got to make that clear for people.
Backwards. That is backwards. That is backwards.
The dollar is going. The dollar is. He's talking about the pair, though.
The pair, right? Yeah.
Yeah. So they cut them.
You talk about this stuff in terms of the currency.
Well,
Talk
yeah,
about
the
this.
currency. So if they cut the interest rates, then the Swiss comes down.
Yeah.
So I think you should talk about it in terms of, you got currency X, you got currency X's government.
Sean, you cut out.
Well, when he
I
comes
think you
back,
should talk about it in terms of, you have currency X,
Right. Okay,
you have
go ahead.
currency X's government. Currency X's government took an action. They either raised or lowered rates on their
right.
currency. Is the effect on their currency, just to cut out the confusion, because we're talking about pairs. So just to keep everybody on the same sheet of music, if we're going to talk about the Swiss raising rates, what should the effect be on the Swiss currency? Then you can talk about how that, what that looks like in relationship to the particular pair. I think that's how it should be approached, just to cut down on confusion.
Right. I was trying to make it easy by saying, okay, why is that candle green? Because they cut the interest rates. That's why it's going up. That's why it has that automatic pulsing action in the direction it went, because it's following the fact that they cut the interest rate. That's why the pair is doing that. Now, if they were to raise the interest rates, then that would come back.
Okay.
I think
But
that's right.
US dollar is also, the dollar is also going high. So this pair in particular is like, it's a
Double
pair
time.
that's both,
Yeah.
it's buy on both ends. So
Yeah.
it could be indecisive of what direction it wants to go in, or
No,
but
that's right.
Well, the US didn't
It
make a
should go up.
decision.
The
The
US
US
is
it
didn't.
should
going
go
high.
up. It should go up higher, just higher.
Yes.
Yeah.
Okay.
This will be this you should identify this as a good trading opportunity because the
Yes.
dollar is
Both
going to get
bullish.
stronger
Both bullish.
and the chef is getting weaker. They're not both bullish. The United States dollar is getting stronger because we did not cut,
Yeah.
and the chef is getting weaker.
Right. They cut.
Okay.
So if you look, let's look at the dollar index. Maybe we should have started with the dollar. Bullish 2-week order block, right?
Mm-hmm.
And I know this 3-month candle is not closed, but we have to look and see what's going to happen. This is the same situation I was talking about with USD Chef. Now, I wanted to see price take off at the 2-month because we had a 2-month bearish order block. But we have this week to see if we're going to break and close above 106.16. Right?
Mm-hmm.
Because we have a bullish order block, it'll be my guess that we have a chance of closing above this thing. Now, it doesn't mean we have to, guys. Like maybe we just get here and price sizzle off and that doesn't happen. And we do get the down continuation. But because they didn't cut them interest rates, the dollar's floating to the upside. So
Yeah.
what could very well happen is we could close above that 106.16, and that would give us a 3-month bullish order block. At which point we could probably expect the pullback to go higher.
But what if they print that money? They're gonna print that money.
Hey man, I can only go by what these candles are saying.
Yeah,
And
I'm saying it's going up there, but as soon as they print that money, that thing is out of there.
so if you would
So
ask
I
me,
have a question.
go ahead.
I thought that the dollar, if interest rates get cut on the dollar, then that would be good for the economy, because then businesses will be able to take out more
good for
loans and
no, it's good for the indices.
for the indices. Oh,
Yeah.
okay. I got
And
that
I'm sure
switched
it
around.
will be good for the economy because all y'all would spend. So that's exactly right. That you would do
But
that to boost the economy.
okay, for the indices, not
It
the
doesn't boost the dollar.
DXY, not the DXY. Yeah, okay.
Yes. Yes.
I flipped that. So yeah, I got it now.
There we go. We having the conversations. That's what it's about.
Yeah, everybody should have this written down. This is the key to understanding where your trades are going to be found. This information right here, understanding what raising and lowering interest rates means. Because when you lower interest rates, that's when you have the bull market. That's when the market takes off. When you raise your interest rates, that kills the bull market.
Mm-hmm.
That's how you stop the indices from going straight up, is you raise interest rates. That's how you stop people from spending. Nobody's buying cars. Nobody's buying houses. They're too expensive. So when you raise the interest rates, you make things more expensive. You make it more difficult for people to borrow, for businesses to borrow. When you lower interest rates, it's easy money and businesses thrive if we understand that, there should be a general direction that we look for the market to go. Now, the only reason why the dollar is carrying, is because we didn't cut the interest rates, right? When they do cut the interest rates, the dollar has to fall. I don't know how much higher we can expect for the dollar to go. We do understand that there is an untapped zone right here, right? I think all of us see that this order block hasn't been tapped into.
Hey, is that the all-time high for the dollar right there?
I think it is. No, it's way over here.
Okay. Well,
So maybe we're just tapping back into this zone before we start cooking. And you would think that this would have to happen because we're in the middle of a bull run. You would think that that we just might go a little bit higher because we do need the indices and stuff to pull back. That's what we keep saying, at least. I think that's what people are calling for. But I just don't want us to get ahead of our skis. I've been trying to make these JPYs sell, and I really thought they were going to sell, and they pull back and they just keep going higher and keep going higher. So if we get this 3-month, this quarterly candle, that's a bullish order block, then all I can expect is for another pullback, and then I can expect us to push higher until something breaks, until your boy comes out and says, hey man, I'm through playing. We're going to cut this dollar. We're going to cut the interest rates.
Don't be a beautiful thing.
you switch it to 6 month. And scrunch it down. Well, I need to see that high point, that high water mark.
$165. We ain't seeing that.
No, put that fib on it.
165.
That was
That's
in
crazy.
1985. That was 1985. We ain't going back there, bro.
That's when we was loving life. I mean, I remember it. I lived it. It was the best time to grow up. I would never give it back.
Maybe we
They
go.
can have that shit. I was broke. I ain't trying to go back. Okay. All right. Well, I don't know.
You could pull back to 117. I don't see it. But hey, whatever, man.
Where's 117 at? 62?
That's the golden zone. You can't look at this pullback because we went lower.
Well, I understand that. I'm just looking.
All I know is we got at the end of this 6 months, it looked like we're gonna have a bullish OB. But what I like about these candles, you can see that it's wicking out, right? We took care of this imbalance, and like we're not even. Maybe we'll test these last 6 month high. We'll see.
Yeah, that's a bearish flag, nasty bearish flag.
And there's a bunch of imbalance right here.
Yeah.
Maybe we're coming back down. I don't know. So
Holding support.
Yeah, we got 3 months to go in this candle, so anything can happen. All I'm saying is if we get a bullish order block, like it looks like we have a chance of doing,
yeah,
then there's a possibility that we push up.
That'd be crazy. I mean, that's your opportunity to accumulate anything that you want to build wealth with. If that dollar gets up there, you have a prime opportunity to buy anything you like.
But this is that, to me, this is the ICT 2020 model right here, 2022 right here. You got that displacement. We broke these lows, get back up into this imbalance,
Yeah.
and then cook.
Is that the silver bullet?
It's the whole 2022 model. That's what the 2022 model is. So this is where we should be able to buy it up to sell.
Yeah.
Makes sense. I just don't know why we having a bull market in the middle of this.
So they can do what they do, rug pull them.
Yeah, I
Give
guess
us
so.
a nasty wick.
It's a brand new game now. They're gonna rug pull them. The people that have never been involved are gonna get the experience of their first rug pull. That's just how I think. Everybody's gonna have to taste that. So,
Hey,
welcome
you
to
buying the top.
Bitcoin.
You buying the top,
Buying at the top, yeah. You can't do that. You have to be
I
patient.
I did the other day. I bought with a 0.03.
Yeah.
I saw it milking. I'm like, man, why is this thing in reverse? So I just sold.
Yeah.
This is why patience is key.
Yep. Put the money to the side at $25, $100, $500, whatever you want to put to the side. Put it to the side. Just wait. Wait until everybody's in fear. Wait until everybody says, "Oh, how low, how low, how low." Now it's time. Put the money to the side.
How low can you go? Can you go down
Yeah.
low?
How low can you go? Oh, it's a
Or are they
pullback.
gonna bring it to
Oh,
the
it's
top?
crashing. It's crashing. Oh, it's a pullback. Oh no, it's crashing. Then when they start saying that, that's when it's time to start dollar cost averaging. That's how you do it. Put the money to the side, let it sit. You'll get your turn. Just take your time. What if it breaks out of the top? That's okay. It could break out of the top, come retest the top at support, and now you have another opportunity. For the rest of your life, you have these opportunities. So you got to know how to read a chart. That's what we teach. So you should be on it. That dollar is going to crash. We know one thing, that it's going to be below that support level. Whenever it happens, it happens. It'll do what it needs to do to the top, but for sure, it's going to break that bottom. And once it does that, you should be in your play already. You should have your companies developed and all that, riding it, just like MicroStrategy. Get it on that pullback. Yeah.
I think this is what we're gonna see.
It's going to be beautiful. I don't know how to mint NFTs, but if the dollar gets up there, you should be minting NFTs.
What does it mean to mint?
You got to create it. Like, it costs the amount of whatever the price of Bitcoin or whatever, Ethereum or whatever. If the dollar gets up there, that means all those things are going to be down low, right? So you want to catch Bitcoin and Ethereum on a pullback. That means you can mint your NFT through Ethereum. I guess that's how you do it. And then you put it on the price of Ethereum at the bottom, and then it will elevate with Ethereum and start to gain value as Ethereum goes to resistance. That's how Michael Saylor put his Bitcoin at the bottom, like Sean, and people who knew that 15 was a support level, and then rode it up, right? Now he has the lowest point. He doesn't have to worry about anything at this point. All he can do is now take every pullback and reaccumulate based on the capital that he's made from catching the bottom. That's what he's supposed to do. He's supposed to catch the bottom. So if you know that a bottom is coming, then you put your money to the side and then you wait. And then when it starts hitting these bottom levels, like a 62 or a 78% retracement, now you can start dollar cost averaging because you're catching the bottom, but you're not putting everything in at the same time. You're looking for momentum. And as the momentum develops, you start putting more of your capital in the form of an NFT. Now those NFTs gain value, and now you have a whole company. You could build an S-corp based off of one of your NFTs. Now you have 20 of them. Now you can build 20 companies because it already has value. Now you can get business credit. People are going to want to buy those things off of you because you bought them at the bottom.
I never learned what NFT and whatever, like all the stuff you were talking about. I'm completely lost.
I
I've
don't
heard of
even
it,
know.
but I don't know what it is.
Yeah, I know what it is. I just don't know how to do it.
Okay. The NFT.
Sean is the specialist on this stuff, and he knows. He caught Bitcoin at the bottom. Like, people say you can't call the bottom. Bullshit. We can call the bottom. We can call the top. And that's what we're doing. So if we can catch another bottom, then I'm going to catch that. We just needed a leg up. Now we get the deep retracement, hopefully. If it breaks
So
the top and
minting
comes
is
back, it's
getting
all
it
good.
from the bottom?
Minting it means you just buying an NFT. You can buy anything in an NFT, or you can create your own NFT. So you just have to purchase it, and you're going to have to purchase it under the price of Ethereum. That's the only thing I know about it. It could be
So,
some other coin or yeah. Sean here?
I mean, yeah, I'm here. You can go on sites like OpenSea. There are a few different sites and buy NFTs or mint NFTs. Different projects will allow you to mint NFTs. And what OG is basically saying is, the things are priced in Ethereum. Sometimes they're priced in Solana. The oldest ones are priced in Ethereum. So if Ethereum is $3,500 a coin, and you go mint one today, and then the price of Ethereum drops down to $2,500 a coin, you will have paid more if you minted it today versus if you waited for a pullback and then you ran in there and minted one. So that's really what he's talking about when he's saying you want to mint it at the bottom. The ultimate bottom would have been like November, December of 2022. January of 2023. That was the ultimate bottom of a lot of these crypto assets. So since then, the market has gone up to where we are today. So now we all think we need a pullback, a decent pullback, a 62 to 78% pullback. If you get that, then the next best place to be minting NFTs or buying crypto for that matter would be during that pullback. So, but OpenSea is the main site. There are other ones I can't immediately think of them, but OpenSea is the main one.
Okay. I see it says here, minting an NFT means creating a unique token on a blockchain. Okay.
Yeah, it's basically just a JPEG. People pay hundreds of thousands, in some cases millions of dollars for the JPEG. I don't fuck with NFTs because I don't know enough about it. I don't know what's gonna skyrocket. I guess it probably doesn't matter if you're doing it on the bottom or if you're buying it on the bottom. You're probably pretty safe that you're going to be able to unload it down the road at a profit. But I guess I know some of them, like Bored Apes, you wouldn't mint that. You just have to buy it. If you go on that site, you buy them for whatever the price they are. So, but anyway, I don't want to sidetrack the trading class though, but that's generally the gist of it.
Well, I wanted to, I've been throwing the idea around about an S-corp and how you get stock certificates, and I wanted to mint the NFTs according to my stock certificates and let the company graduate value through the NFTs. Now, I don't know how to do that. That's just an idea. That's something I would like to do. So, but you got to have the escrow in place, get the certificates, and then buy those and print those NFTs. Now, it's not just Bitcoin because I can do it on a gold ETF. I can apply value to each certificate on the pullback on gold and buy a gold ETF and attach it to the certificates. That's what I'm thinking.
Mhm.
I think it works that way, but I don't know how to do it.
Well, I was able to mint NFT on Solana. You know, it's not worth anything, but um, it's not difficult to mint an NFT. I mean, as far as ascribing value to it, you know, that part, you know, I'm probably not going to be the best guy, you know, to
Yeah, yeah. I'm
you know,
putting it out there just in case somebody may know if it works that way. Because if it does work that way, because that's how Michael Saylor did micro strategies. So yeah,
I,
I think
I
it works
think
that way.
it probably does work that way, but MicroStrategy is a publicly traded company, so it has real world value. So it's
On
easy
top of
to
the Bitcoin.
right. And even before Bitcoin, I mean,
Right.
it's gone up a lot more since he's been putting Bitcoin on a balance sheet. But where I go with it is if before crypto, MicroStrategy had a value, whatever it was. So you know, you mint the certificate or whatever, and you know that basically that NFT is tied to that company. And as that company's value goes up or down, that's gonna be what that NFT is worth. But for a private company like your Escort that you're talking about, I don't really know how the market would ascribe value to it. You know what I mean?
Yeah, yeah. I want to find that out big time. I want to find that out because I think that that's how it works. But I mean, because I'm going to be buying whatever I'm buying, I want to attach it to that. That means I'm going to build a skeleton company per se.
Mhm.
So, you know, but okay, we're sidetracking. Let's get it back.
Yeah.
That was
Okay, are we
that was
back to
that was
English?
that was deep. That was deep. My bad. Our bad.
I only know English and Spanish. I'm sorry. No, I'm just kidding. Yeah, that's good stuff. Yeah.
That was a rabbit hole.
In truth, I guess your company would be worth whatever it's worth. I guess um, if you ever wanted to sell the NFT, you know, that's really um, kind of, you know, where I think the black hole begins. You know,
Yeah.
if you listed that NFT on OpenSea or any other site and you slapped a number on it, you know, would somebody pay for it? You know, I mean, how do they know what they're buying? How do they know what it's worth? You know, I mean, that's
I would create a trading company and teach people how to trade. So now that it has generated value, now they can provide the employees with trade accounts and they can trade those accounts under the company name. Now it's running. It's a format.
but how do
But
they ascribe value
you
to it?
have to have people as an example of how it works. So we generate that through what we're doing here. That's why I'm doing it. But it's just a skeleton because it's attached to the value of where I bought the coin or where I bought the ETF. It's gaining value with that ETF. So however much I put on that company, I already put it there. Now it's accumulating
But how do
value.
I know? How do I know as a guy that comes along and wants to buy that NFT and you slap whatever number you slap on it and maybe the number is legit? How do I know that it has that value? And again, we can talk about it later, OG,
Yeah,
but that's
yeah,
where I'm
yeah.
coming
Because I want to know. I want to know because if it has
But
that type of value, then
I,
that'd be awesome.
you're not going to be able to do that unless you attach like Bitcoin or something like that's what Michael Saylor did. He
That's
he
what I'm
he,
saying. That's what I'm trying to do.
he tied it into the Bitcoin. So you have to
Yeah,
have a certain amount of Bitcoin purchased
but
by
it
your
doesn't,
company.
it don't necessarily have to be Bitcoin, does it?
No, you can
No, it
do some,
doesn't, because
it could be Solana, it could be anything, but
That's what I'm saying. That's what I'm trying to do.
all right, we can talk about it later, because like I said,
Okay.
Sailor had a company with a publicly traded company with an ascribed value to it long before he
Yeah,
put Bitcoin balance sheet.
right.
but it wasn't a valuable company. Huh.
Well, it was a valuable company. It wasn't nearly as valuable as it is now, but it was trading on the American Stock Exchange. I mean, it was worth, the man was a billionaire before all of this. So, but anyway,
Was it a billionaire? So
huh?
I'm looking for this 200 pip sale. I don't know what y'all looking for. I don't know how far this stuff gonna sell, but we'll see. Maybe this is gonna be a 2 week bearish order block, which I don't know if it makes sense or not.
How is CAD on interest rates?
They ain't doing that. They ain't raising
Nothing.
it. So here's the deal, dude. If if we get a 200 pip drop on this CAD, this is gonna be a bearish order block. So maybe we'll only get 100 pip drop this week. I don't know. I don't, a lot of this stuff is gonna be up in the air. But y'all already see that to me, this liquidity grab means sell. And if we get that sell, and this sells 200 pips this week, then on this 3-month candle, that's going to be a liquidity grab too, which would say we're going to sell further down. So maybe we are going to get a good sell-off on these JPYs.
Why wouldn't it?
Well, I mean, if you look, we know this is going to sell because this is the chef JPY.
No.
That CAD EJ doesn't look as clear. It's a bullish order block. It did grab some liquidity, but it would have made it a lot easier if it would have closed and respected this bearish order block. So this one doesn't make as much sense. The GBP bullish order block, but it has that liquidity grab. You know what I'm saying?
Yeah.
To me, these are on the fence. NJ is a sell. Clearly, bearish order block. We sold down. We'll see. Maybe it pushes back up to sell further. I don't know. AJ, liquidity grab, probably going to cook. Y'all gonna have to make some choices this week, boy. I like you, Chef. Uh, I like selling CAD JPY, to tell you the truth.
The EJ and the AJ, those patterns are the bullish, bearish, bullish pattern. Those are going to be bullish patterns, so it's not going to sell.
You say what?
If you go back to AJ
EJ?
and EJ and although you see that bullish, bearish, bullish pattern, that's
Yeah,
a pattern that's go up. It's not going to sell.
I disagree. It's going to sell. It's going to pull back at least. Now what it does after that, the jury's out. The jury's out. I think the US UJ is the same way. UJ has a bullish order block, but this can pull back. I mean, it will pull back. I don't know how far. Let me fib this candle. Just do some basic analysis on it. There's a lot of indecision. I think it really depends.
All right, Todd, go ahead and break it down. So go down to lower time frames and you'll see that the prices are already starting to keep pushing up. You're not going to see any bearish sentiment in that.
Okay. All right. All right.
Hey Todd,
What?
I got a question, and I know it's a beginner's question, but I might forget before Kim's class. It might sound foolish, but I'm gonna ask it anyway because it won't get off my mind. I know nothing about fields. So when
About,
you are fielding, you go from the bottom to the top if you're looking for it to go up or down.
well, you fib the direction that the candle printed. If it's a bullish candle, you fib from the bottom to the top. If it's a
Okay.
bearish, you fib from the top to the bottom.
Okay, that makes more sense because I'm like, oh my God, I don't understand it.
It's all good. I watched a video from Jay Take Profits, and he'll show you the basic fib strategy and how it works. So Isaiah, this will be a pullback on that 2-week candle, right? You agree?
Yes.
All right. So let's just say it pulls back here. It would have to push back up. And it might push back up. It might pull down and push back up. Because what's also going to happen, Isaiah, is you're going to get a 3-month candle close. So this is going to pull back too. Or you're saying it's not, it's just going to keep going up.
It's gonna go up because if you ever notice that the market doesn't start the way that it ended every week, if it goes bullish, whenever the market opens back up, it's gonna be bearish, depending on the way that the market ended on that week. So as you see that you see that candle right there is pulling back. Yeah, that is a pullback, but as you kept going down in lower time frame, you've seen that it was a morning star pattern starting to form. So basically the price is going to go up. So because the price is what's going to happen is the things happen on the lower time frame before it actually happens on the bigger time frames. Even though the bigger time frames are king, as you can see, you see all of that bullish momentum right there. Price is going to go up.
You're right, Isaiah. It's going to retrace. It's going to go up right here. It's going to retrace this daily candle, and then it's going to keep falling. Your first move, yeah, it's going to go up, and then it's going to drop.
Right, and that would be the reason why I would get in for that buy and ride it up to the next psychological level. Or you can pivot and
As
get
long
out
as
of
your
crib level,
psychological
or you
level,
can get out at
as long as your psychological level is about 40 pips away, you're good. This candle, this is the golden zone for the pullback on this 2-week order block. And if you just take the weekly and you fib this weekly candle, it's probably pulled back. It's probably already in the zone for this if you just did this weekly. It's right before the golden zone. Here's the 78. The 78 is the golden zone for the 2-week move. So I believe we're going to come back here at least. Now, maybe we push back up to close this gap, but I don't think I'd be willing to bet like some big money that we're not going much higher than where it is right now for multiple reasons. But I think the main reason is you got to understand where we are right now. We're in a 3-month order block. We're inside the order block. We're about to close a bullish order block on the 3-month, right? I would still expect a pullback before going higher. But you just expect it to keep going higher, Isaiah? Does anybody else have an opinion?
I mean,
yeah, I don't disagree that it won't have a pullback, but what I'm saying is if it does pull back, it's going to be short lived.
That's
what's
what
the,
it's reading. That's what it's reading. I mean, when you go down in the time frames, you're going to get a bearish chalk. That's how it starts. We will all see that bearish chalk because it's been so bullish. The bearish chalk's going to stand out like a sore thumb. You can't miss it because the safest way to go is to get the bearish chalk and then come in on the retracement. So you're not missing anything.
and maybe you're saying the same thing I'm saying. This pullback that I'm looking at is about 140 pips. It's 100 pips to the zone. That's 167 pips to the 62. Is that what you mean?
Yes. Yeah, that's what I mean. We're saying the same thing, but I just see it different.
Yeah, I think it's going to pull back before it goes higher. The only question is, here's the question though. If it pulls back and hangs out, like this, it has to do with this week is going to close this 3-month candle.
Yeah.
So whatever it does this week, we're gonna have a 3-month candle closure. Now, I get it. We were here before. We got a wick. We came up here. We wicked out. Now we came up here again. Maybe at the end of that 3-month candle, maybe we don't need to pull further back. Maybe we're just gonna keep pushing further, further up.
Now
All
stay
I'm
right
trying to-
there. Stay right there. Stay right there. You see the previous low down there? Just keep it the way it is. Like it's a bullish flag. See, it's a 3-candle pattern. You get the pole, then the second, and the third candle. Once it does that third candle, you are now in a bullish flag. That's what he means by it can't linger there, or it's gonna go. The low below that is the same thing. 1, 2, 3. After that third candle, it's too late. It's out of there. That's a bullish flag. You need to see bearish chalk or it's a bullish flag. It can't linger.
I'm just trying to see if there's imbalance. Imbalance. So there is imbalance. There's a reason for price to pull back to that golden zone. This imbalance looked like it's tapped. It was. At least it was probably consequent encroachment. We can call that consequent encroachment. I'm not going to measure it, but we can just say that's 50% of that imbalance. But this imbalance hasn't been touched. Hey, Leandra. What do you mean monthly 20%? Is your mic working, Leandra?
It's hard real quick. You see, if you were to draw a support line where price currently is, and if you look left, you notice that it already touched that wick over there. So whatever the market touches, the market reverses. Yeah, right there. You see price is already even with that, and it retested that wick right there.
Okay. I don't disagree that it touched this wick, and I believe it will come back up to this imbalance.
You're saying come back up or down to them?
Well, I think it's coming up.
Oh yeah, definitely.
I think it's going
But
to come back up to this imbalance and then sell down.
you see how it's lingering down there though? You see how you're getting the 3 candles down there like that? See, it's lingering. See, it's gonna drop down. It's gonna reach down, right? That's buyer's inducement. Yeah,
This can pull up first.
it
We'll go
can.
there.
Yeah. It does it all. That's why we mark the zones. You should be going to zone. You should already expect both biases. You want to expect both biases. It's going to touch both zones. Doesn't matter how it does it. These are the zones you're supposed to be anticipating. So you should always be able to catch one zone or the other. Now you're cooking. You don't want to get stuck in one bias. You want to know the probabilities. Trade the probability.
Yeah, I think that this week here's what I'm saying too, Isaiah. There's no way in my mind, there's no way that price goes higher than this week. I think that price comes lower, maybe it comes back up, but price will maintain this level or lower, because this 3-month candle, this is the wick of the 3-month candle, right?
Yes.
And this is the like if it goes higher, where's it going to create the wick? Unless it goes up and then pulls back. It can do that. But that's why I'm saying I don't think we're going, if we go higher, we'll go higher and then we'll pull back on Thursday or Friday or whatever. And then you'll have a 3-month candle with the top wick.
And we're having the conversation. So it's beautiful because we're going to come back to it and we're going to see how it played out. It only makes sense that that wick is legit. So we got to look at it like that. So we'll see.
From a real world fundamental perspective too, I mean, didn't Japan just raise their rates?
They did.
That's right. Yeah. We got to keep talking about it because that's what happened. What are you to expect? Bearishness. That's what we're to expect. But we don't have a bearish order block yet. We will get one and we will get a tap in. It's going to happen.
What did Europe do with their rates?
Same thing the US did. Nothing.
Yeah, so I mean, I don't know. I mean, I kind of think anything can happen, but I know the dollar is going up against the yen and they raise their rates. So maybe the euro will continue to rise too. But what should happen is the yen should get weaker against that currency, or the yen should get stronger because they raised their rates. My bad.
I agree. But everybody should, I'm not trying to curb anybody's bias, but I see the imbalances. There are 2 imbalances. We drop down to this 4-hour chart. There's an imbalance above price. There's an imbalance below price. If I go to this daily, the last move was a daily candle push down. If I fib this daily candle, I guarantee that imbalance is about the pullback range. So I would expect a pullback to continue down. The golden zone is right in this zone right here, demand zone. So
Now, what if it breaks the low, Todd?
Well, it's still got to pull. I mean, it's three zones right here. So if it breaks the low, I mean, it's still gonna pull back.
Well, I'm saying if it breaks the low and we come back and we're talking about how it broke the low, what are we going to be saying at that point? We're going to be saying, okay, maybe it's going to be bearish.
Yeah. Yep, bearish.
Yeah.
I just think that this is a lot to happen in 1 week. So
yeah,
I think we're going to get some meandering from this pair.
And if it meanders, it's a bullish flag. That's what's happening.
I agree. But at the same time, 1 April is going to be, because this is a bullish candle, 1 April should be sell. We should sell first, right?
Yeah.
So even if this hangs out here, 1 April, we should get a push down. And then if it's going to buy up, it should buy up from down in this area, I would think. I mean, that's what I'm biased to see.
It's the safest way to go.
Leandro says this could be a 3-week or a 4-week move. And this is the 3-week candle. Indecision. Which is,
I agree. It's probably gonna take forever to play out whatever it does.
right. It could be Wyckoff. This could Wyckoff, could be a little, profit taken, a little liquidity taken before it shakes people out.
And no, with Wyckoff, you have to establish a top and establish a bottom in Wyckoff. Now, if you think of it in that fashion, you have to have a top and a bottom. The top at this point is the wick, and the bottom is where the body is right now. That's the Wyckoff that it's in right now. It doesn't have a red candle involved in the structure, so we don't have a legitimate bottom yet. So
Well,
it's out of
know the-
Wyckoff. It's in transition right now.
well, the funny thing about it is this could have been, for all intents and purposes, the top. This whole structure could be Wyckoff going on a higher time.
No, it is. It is.
So that this price could just be turning to sell. I mean, we'll have to see. I don't know.
Well,
I can't.
right now, it's breaking out of the top of. It's telling us that it's breaking out of the top of the Wyckoff. It hasn't told us anything else. It only says that it is now breaking out of the top. So now you can fib the whole leg, and it is a buy. It may be until you get the first red candle. That's what's going to determine. And it's going to be long, just like the other one's long. That is going to be long like that red candle.
Well, if this monthly candle closes and we just wick these highs, I'm not going to be bullish at all. I'm just
Yeah.
telling you.
Because you don't want to get left behind, because the candle's going to be long like that red candle. You have to catch it. That's the thing. We can say it's bullish all we want, but when that candle starts, it's one shot, one kill on that. So that's what Todd is saying. I'll catch it too, but it's going to be long. When it's the decision, when it is the candle, you're going to get one opportunity to catch that, or you're going to be late. Now you got to deal with the retracement, if it even retraces, because if it is a sell, it's out of there.
And I would just say, if I got to have that much put into an analysis on a pair, I'm just trading something different. Like this. This gives me a bearish order block, a tap in, a liquidity grab. Now let's just sell. That's what this pair right here is just telling me, hey, just get in for the set.
Yeah.
To me, this is a much easier decision than guessing on that other one.
It's beautiful how it looks like, because that's what we usually be at the red candle all the way down trying to decipher if it's going to come back up there. And now this is exactly what that looks like. Like, this is what you be waiting for.
It came back up, it grabbed the liquidity from the top. And yeah, it's a beautiful thing. I would expect to pull back on this one too. Where's the daily? Oh yeah. This brutal. This brutal. Is Terry on the call? Is Kim on the call? Oh, I messed that up.
Just looking back at the previous structures, looking at a candle that might be similar to that, and what kind of nastiness it can do after that candle. What it's known to do, be nasty across the top, just undecisive, and then all of a sudden it gets clear. You just have to see that.
Man, this could pull right back to this imbalance and make, man, this would be a great trade.
It's clean.
Clean as a sum gun. Ugh. That imbalance is good right there. Just a few options. To me, the chef pairs, USD chef, maybe Euro chef, British pound chef.
When Todd is talking about chef, you know you need to get on it. Come on.
This is a good one too. US 30 cooked.
That's clean.
Imbalance. Maybe this will buy back up and let Sean get a chance of getting up.
It could sweep resist. It'll sweep resistance if it wants to. It's fast. It does it. Straight to the point. 41,000 maybe.
That would be
Nice
great.
sweep. An unbelievable sweep. Oh, it's bullish. Rug pull. Nope.
That's another 400 points if it come all the way down here.
Oh, it's going all the way down.
This is the area that I wanted to go before, but you know, if we ever get these pullbacks, you know, on these indices, I would love to see it, but it always seems to get cut short by something stupid.
Yeah. Them numbers are clean though. It respects its levels. Marry your pair.
Hey, did y'all see Black Jesus? Y'all see Putin introduce y'all to Black Jesus? Did y'all see that?
I heard about it a long time ago. Well, this might be 2 years ago when I saw it, but yeah.
Anywho, y'all have any questions? Any questions? Do y'all have any questions? We're gonna see what gold do. We're gonna see if she act right.
Yeah. Dovish Fed, Dovish Fed. Hey.
Does anybody have any questions? Speak now. Y'all, what y'all trading?
Oh, for the record, Japan raised their interest rate. For the record, and gold dropped. When Japan raised their interest rate, gold dropped. So you know that now. If they're going to cut the interest rates, then what's that going to do? Make gold go up. It has high value of gold. Australia and Japan have high volume gold. So when they have things going on with their interest rates, it affects gold in Asian session. So now if you have an idea what they're going to do, you might be able to catch yourself a little entry because you know what it does. Come on. What if the US, Japan, and Australia all raise their interest rates? You know gold is going to crash. If they all cut the interest rates, we know gold's going super parabolic.
All right, good folks. guess we'll be in those market streets tomorrow, waiting on that move.
Hey,
If you get your
Sure.
back broke on Sunday, you might want to just wait until Tuesday.
Yes, sir. Good stuff. Appreciate it.
Thanks, Todd.
Thank you, Todd.
All righty.